Welcome, everybody. Scott Riley, the market update desk, October 9th, NMLS 157524. We got a great little bonus yesterday with the Tigers' bats coming alive after the sixth inning. I got to watch the last couple innings. Kind of cool to see the Tigers maybe waking up. We got Skubs pitching today. Maybe we can get to game 5. So, good news from the sporting world there. So, today is day 9 of the government shutdown. Um, and with the limited data coming out to be acted upon by both the Fed and the government and Congress, we're seeing kind of Congress and Fed within commentary and everything going two different ways, it seems like. Yesterday, we got, the main data piece was the 10-year auction for treasuries was met with average demand, which was good to see because wasn't sure how that was going to go with the shutdown and all the politics going on. Now, it did cause yields to drift a little bit in the afternoon. Now, today we're going to get a 30-year auction at 1 o'clock. So we'll see where the demand is. That hopefully we still have strong demand. Now, the Fed the Fed minutes that were highly anticipated yesterday due to the Fed cutting rates at the September 17th meeting and showed a clear division at the Fed. And also has put some slight pressure on the bond market because of the division. The minutes showed that the Fed's clearly going on two different paths of rate cuts and their views on inflation and labor, but most were in favor of cutting rates further this year. Now, this could mean, we don't know yet, it could mean one cut or two cuts. We have yet to see. Now, right now, the Fed futures market is factoring in about a 95% chance of a quarter rate cut on October 29th. Now, in those minutes also showed some members believe that lower net migration in the weak labor market will help inflation, while others were more concerned about the tariffs, higher consumer inflation expectations, and business contacts telling them that they would potentially pass along price increases. On the labor market, we still have some Fed members believing it's very strong or strong, which how they can say that is very puzzling because of effectively 3 out of the 4 ADP reports previous have shown a net job loss. Now we do have Fed members that are speaking up and saying the labor market is weak, and obviously based on data they would seem to be more correct. Now, something to keep in mind, an eye on and watch is going to be the upcoming jobs reports. When we eventually get them, we're going to start to see the 150,000 government workers that took buyouts start to show up in these government unemployment claims. And that could cause fewer job creations, and the labor force figure could be more pressured because of potential increase in unemployment numbers. There is a big discrepancy in where Fed members believe the neutral Fed funds rate would be, which is why some believe there's still going to be room for cutting multiple times this year versus no more cuts. On the tariff front, most of them agreed. The impact is temporary, but because they are not coming all at once, there's still several big trade deals to come that could have impacts that have not filtered through until maybe late this year or next year. Now, lastly, the Fed is indicating it's watching AI and the impact on GDP, investment, and the labor market. In fact, just locally here, we saw yesterday Acrisure, which is a big cornerstone employer here, was laying off 200 accounting workers locally and 400 total. And they specifically mentioned that they're integrating AI more into those capacities and need fewer workers. So that makes sense with what they're saying, with what we're seeing here locally, even. Now, we did see the National Retail Federation come out and release their version of retail sales report yesterday, and it showed a steep decline in consumer spending, which had been very strong. Now, while it's possible for for a lull after the back to school shopping season, and ahead of the holidays, it's worth noting that it could be a canary in the coal mine and something we got to watch for. Is this leading up to anything? As we go forward with holiday season, it's going to be very important to watch. On the technical side, 10-year treasuries are sitting, as I'm looking, 4.1365 right now. We've seen a pretty tight band of both treasuries and mortgage-backed securities during this shutdown that we're still in. My guess is without large economic data coming out, we're going to be pushed and pulled by treasury sales, geopolitical activities. And by the way, we saw what appears on its face to be a peace treaty or the start of a peace treaty in the Middle East, which let's hope that comes to fruition. And then also domestic politics. I think those are going to be the push pull levers until government data comes back online and is being reported. So we've been super busy. Buyers, don't hesitate. We're seeing significant uptick in the market. And that's really because people are starting to see it's the best time to buy in the late fall and winter for buyers to get better opportunities with not as much competition pressure. So give us a call, 616-293-2189. We'll help you through the process, getting pre-approved, use our knowledge to help walk you through what programs are best, and help work with you and your agent to get your offer accepted. 616-293-2189. Have a great afternoon.